Tuesday, November 28th, 5 p.m. New York time. Stock markets closed and the future markets are closed. A lot of price action occurred over the past several hours, as well as last night. Looking here at the S&P 500 futures on a weekly chart, we are still inside the range of last week, right around this swing point right here. That was a swing point, September high. Yep, very concerning here. Massive green trend, higher highs, higher lows, very overextended. One would expect some point it's going to be a pullback. Looking here, it's in a consolidation right now. We haven't taken out the higher low, like I said last week, concerning. 10-year yield broke below the low of last week. What a fake out. Green candle last week, little tiny wicks, potential reversal. It did. It went up a little bit this week and reverse and tanked. Testing this area. Let me zoom out so you can see. This red horizontal line was a key level. Yep, label that different color. Let's do purple. There we go. So if you're bearish the yields, you want to go long the bonds. Go long TLT, go long ZB. I would consider doing that. Yep. US dollar index broke below the low of last week and already very close to the 0.618 Fibonacci level. See, this is a trend. And this Fibonacci tool I have on here shows we already broke below the green horizontal line, broke below the 0.382, and the momentum continued down, just shy of testing this. Well, I took a bearish trade yesterday, so I already have gains. When I close the trade, I hope to close it in profits. Two different things, gains and profits. Again, I'm looking for it to go lower, so I'm letting my gains continue. Maybe close the trade before the end of this week. Crude oil still inside the range of last week. Interesting, right? Yes, because you have dollar down. It's typically the dollar and commodities go inverse. So because we have dollar down, you would think crude oil would go higher. Yep, but it hasn't. Still inside the range. 2 weeks in a row inside the range. Building energy. Well, look at gold. Gold did move higher with the dollar going lower. So again, not all commodities are cooperating with the dollar. But again, you have gold here, high, big body, broke above the high of last week, took out the swing high right here from July. So how much of this is demand first just because the dollar went down? It's not 100% just because the dollar went down. Sure, there's some buying in gold. Zoom out to see a little bit more. And look at that. Here's the high of the year. Bitcoin also inside the range for the week. So if you think markets are panicking and people buying gold panicking, it's not occurring here in Bitcoin. Nope. A little more. So this is the highs of the year. Again. Now looking at natural gas, green for the week. Yep. Higher high, lower low. Interesting what's occurring here, a lot of whipsaw. But again, natural gas is a trend down. First, crude oil is in acceleration. Again, dollar lower, you expect natural gas to go higher. Well, there's buyers stepping in here. And silver, just like gold, popped higher. And the euro going the inverse from the dollar as expected. Dollar goes down, euro goes up. The US dollar index, about 57%, a little bit more, is made up of the euro. Yep, so look at this. Already testing the Fibonacci level right here, 0.618. Trend down and retracement. Also taking out this area. Let me move that. There we go. It also took out that September, or sorry, that high right there, purple horizontal line. I'm going to move that. So that's the weekly charts. What's occurring right now? A lot of candles, a lot of price action. Already taking out the past week's highs, and it's only Tuesday. Let's take this to the faster time frame, the daily. Daily chart, S&P 500 futures. Green candle, made a higher high, lower low than the prior day. Huge consolidation here, small trading range. Small trading range because of the end of last week. Friday was a half trading day. Thursday was a holiday. But I'm very concerned here. Little tiny candles could be a sign of distribution. But we also near the end of the month. We expect institutions have money coming into them for long-term investors. You might be making a contribution to your pension or your IRAs. Pension might be insurance funds, hedge funds, mutual funds, typically. You see that money go in at the end of the year, end of the month, sometimes the first of the month, and then the institutions start buying. So again, be cautious here. Doesn't mean we're going to dump, but I expect at some point we're going to have a retracement. So I'm not looking to accumulate up here. I had a day trade. I closed my day trade for profits. So already I'm back in cash, waiting to reload tomorrow. If there's a trade, not every day necessarily a trade in every financial instrument. Look at here, 10-year yield broke below this consolidation down here. Again, if you're bearish, one should be trading the inverse. You can be buying TLT or doing the options as well on the 30-year US Treasury /CB. Those are trade ideas. And again, look at the US dollar daily chart. Broke below and closed below this consolidation. Let's zoom out a little more. Here's a swing low here too from August. Look at that. We took that out. Nice. Gonna remove this. So a little insight here. I was expecting dollar could go up in here and a retest to short up there. And I missed it. When this occurred, I was thinking it was going to go back up again. Well, attempted it filled. So there were several times I was going to consider taking shorts and then neglected, but I went short yesterday. Again, now I'm disappointed. I didn't take my short that time as well as that time. And crude oil. Look at this huge consolidation on the daily charts. Like I said, there's gold gapped up this morning for futures. Let's extend this out. See what's occurring here. Yep, that was October high, broke above it. We'll do that. Again, Bitcoin made a higher high, higher low than the prior day, and sellers are up here rejecting it. We'll do a staircase pattern, higher high. Natural gas, nice reversal. Huge trading range today. A lot of activity on that. Smell some more. Yep. So we broke below and closed below this green zone. Gonna remove that. Broke below several times, went back above, below this October low. Now what we have occurring here is a consolidation. So look, staircase pattern, lower low. Has a gap. Expected this to come down here. Expect this gap to get filled somewhere. And then buyers already showing signs of stepping in. So notice here, this red candle. Yeah, we closed red, but we made a higher high, higher low. And we did not take out that low, that green candle. Where the day is bearish, the consolidation is bearish, but this candle showing defenders stepping in here. So it might have more going down, but it looks like maybe weakness. Weakness look to be buying the weakness. And silver higher. And the euro, again, broke out of this consolidation. Let's take this to the intraday on the 4-hour candles. Here we go. Okay. The past 5 trading days, that's been 500 futures. Look at this. We're still below the prior week high, and we're above the prior week low. Huge consolidation over the past few days. A lot of whipsaw today. So again, here, this past day here, we tested this red horizontal line is 45.75 quarters. Remember that. On the futures of the ES, 45.75. We tested it there, rejected it. So that means there's sellers up there. There's not a demand to buy it. We had a lot of rejection over here that never even made it up to 45.75. And then today, we tested it and rejected it. Rejection, 45.75. Testing, 45.50, big round number. Potential trade areas off of these. And your yield. Let's zoom out. First, prior week low, we broke below it, closed below it, again, bearish. And we look at this midpoint, red horizontal line, all the way back from here. That calendar day was 9/20. Broke below it, closed below it. Again, trading bearish. Trade bearish on that financial instrument. There we go. Oops. This. And the US dollar, again, blue horizontal line, broke below the prior week low, which my trades were yesterday around here. I'll move that. And the August swing low, let's zoom out. Oops. All the way back here was a swing low in the US dollar. And today we broke below it, closed below it. And we'll look at one more. Euro. Zoom out. Of course, the euro, the inverse. So look, swing high, prior week high, the euro broke above it. Again, we know because the correlation with the US dollar. And look at this, 110. Big round number. And the prior week low is right there, that big bullish pin bar. Nice. That's it for the video. Thanks for watching.